So let's discuss all of that with our guest today, Mr. Naveen Mathur, commodities expert and Associate Director, Commodities and Currencies and Equities at Angel Broking. So Mr. Mathur, a very good morning to you. So zinc has been a stellar outperformer. So what's your take on the zinc at present, and do you have any sort of strategy around it?
Yeah, I think what you rightly said was the production cuts which happened last year and continuously from the last couple of 1 or 2 years. Piyush actually gave the impetus to the zinc prices on the upside. Now, if you notice this particular year, although only 5 months have gone by, but we have seen the prices of zinc moving upside to an extent of 15%. So I think largely the factor behind the upside of 15% this year was the production cut. Couple of mines from Australia to Ireland have shown their intentions of bringing down the capacity and the production levels. So all that particular fundamental reasons helped the prices to move upside. The other major fundamental reason also was the question of the China growth factor. The GDP of China is continuously on the downtrend. From double-digit growth we have seen a decade back to approximately 7%, 6.5% territory. So I think overall the fundamental reasons behind the supply and the demand issues plus the China factor created the upside move for the zinc prices, and currently we are seeing 125 or so the markets are trading at.
Sure, as you're talking about the supply and the decline from the Australian mines, so do you think it's going to sustain, whether the new supply from European mines, is it going to be enough, or it's not going to be basically fulfilling the demand? So how overall you're looking in terms of the global scenario?
See, I think there is a conflict of interest between Europe particularly and Ireland and Australia. Although everybody believes that the base metal pack, particularly Piyush, is not looking too great, so don't see too much of the kind of supply constraints to be washed out. We still gonna see some kind of supply constraints, but in line with the aggressive supply reduction, the International Lead and Zinc Study Group in April has already said that the zinc production, the refined zinc production, will actually trail consumption by approximately 350,000 metric tons this year. So I think the overall factor will therefore affect the widening of the deficit from the forecast of around 152,000 metric tons in October. So I think the question remains that the prices would still be kind of little bit on the upside because of the deficit, but overall in our view particularly, although the markets would be range bound from here onwards, because we already seen, as I said, 15 to 17% upside. I think the gains would be limited from here, Piyush, but I think the markets which are trading at around the LME zinc prices are around $1,900 levels. They would be around between $1,832 levels to approximately on the upside to 2,000 levels. So $200 level would be kind of a limit where the markets would trade on, and therefore the prices has to kind of little bit move upside, but not too much of an
Mr. Mathur, I'm understanding, as you're saying, that pricing outlook basically remains resilient, but as you're saying that perhaps one has to be tentative around that. But let's talk about the inventory, because I think that is affecting the pricing directly. So, and it's very interesting, on the LME side, if you see, the inventory is actually falling quite consistently, and over the last few years a lot of destocking is happening. But on the Shanghai side, if you see, the restocking has started, the inventory is rising. So should we think that all the inventory is actually being reported in the warehouses, or there is a lot of inventory which is in the bonded warehouses, and perhaps actually could also play a spoil sport for the zinc price in the coming future?
I think the line got cut.
Sure, I will ask my question again. I'm saying that there are two trends on the inventory side. One is in the LME, the inventory is declining over the last few years consistently. If you look at the charts, I'm just reading out the chart for you. For the LME warehouse, over the last 3-4 years, the inventory is continuously declining. So there is destocking happening there. On the Shanghai side, over the last 2 years, we have been seeing the inventory rising. So do you think that most of the inventory is being reported across the exchange warehouses, or there is a lot of inventory which is outside the exchange warehouses and the bonded warehouses? I think we've lost him, his link. Perhaps we are going to try reconnect him. But like, what's very interesting is that if it's very clear that because there is a tight supply, and if the inventories they are falling, but in the China, because the demand is slowing down, and as Mr. Mathur was pointing out, that because the GDP growth has slowed down and a lot of demand was coming from steel industry, and because if you have an overcapacity in the steel industry, and if the steel capacity utilization is coming down, there was a reduction in demand from for zinc there. So Mr. Mathur, you're back. So I'm putting my question again, because now the steel industry is seeing some signs of revival, but if I look at the inventory trend, in the LME, the inventory has been falling over the last 3-4 years, but in Shanghai, the inventory is actually continues to increase. So do you think all the inventory basically is being reported across the exchange warehouses, or there would be a lot of inventory outside the exchange warehouses, in the warehouses?
I think what Piyush you're asking is definitely the right question and a very important question to be understood. Yes, the China overall inventory level at the LME is definitely, the inventories are down, but then if you see the trend from the last 1 or 2 months, or I should say the last couple of months, 6-7 months, actually the markets have taken, actually the China factor has been on the restocking side. So China, what you rightly said, the Shanghai particularly, the inventory situation has been, they're restocking, they're actually, therefore the inventory built up is there at the Shanghai warehouses. Now it's very difficult to answer whether it's just the Shanghai, the Shifei, where the inventories are built up, or it is something more than that. But overall, yes, what I feel is there would be a balance out of the deficit, the demand and the supply situation in months to come, and I think therefore I'm not seeing too much of the bullishness. Somehow the demand, the inventory factor and the supply factor would balance, would evenly balance out in around 6 to 8 months. It's not going to happen in a near future, but yes, the LME inventories continue to be on the downside. At the same time, the Shanghai inventory, the restocking activity would continue to build up, but that particular factor would I think will be petered out sometime in due course of time, and therefore I'm not seeing too bullishness. 1900 or 1850 dollar levels on the LME zinc prices are something where I am of the view that the market should consolidate, the maximum levels to go off at around $2015 levels for the markets.
Mr. Mathur, like in one line, so a lot of Indian traders actually would be listening to you very carefully, because you hold a very good share in the commodities. So basically in one line, if you actually want to give a trading strategy, would it be avoid at present, would it be short, or would it be long?
See, for 1 or 2 months, I would think the prices are currently at around $125 levels. Piyush, I think one can buy in with a risk strategy at around 121, and the resistance levels on the upside can be seen at around 132. So I think the stop loss for this particular trade can happen at around 120, or say around 115, 116 levels for 1 or 2 months. The target price on the upside can be seen in a range of around 130, a kind of a 5 to 7 rupee upside movement can be seen from the current prices of 125 on the MCX.
Thanks a lot, Mr. Mathur, for your strategy and for your insights on the zinc. So that was Mr. Mathur, and that was our session on the zinc. Overall, as we basically heard from Mr. Mathur, that zinc is a very resilient commodity in terms of supply and demand, but perhaps the prices have run their course of time, so perhaps it's a time of consolidation for zinc. So from our side today, this completes our zinc discussion. Coming up next, we speak to market guru Sanjeev Prasad of Kotak Institutional Equities on the road ahead for Indian markets.